You are about to find out the key levels for Foot Locker ticker FL. Now, why are they down 34% today? Now, this was off earnings. So we went from around $23 down to $15. Now, why is this so significant? Not only is it obviously a very large move, but it's where it takes us from a longer term outlook. So again, this is looking at a max time frame chart on Foot Locker, and you can see this kind of $15 level. When did we last hit this? This would have been in 2010. So again, Foot Locker has not seen this sort of price since 2010. So a massive decrease in the stock price. Now, what are the key levels that we want to be paying attention to? So my main focus on a stock like this is, firstly, I'm going to be patient. I'm not touching it right away. And the reason for that is, obviously, we've just had this move. Even if we were long buys, it's very unlikely that the stock has its earnings and then starts flying to the upside. And what I mean by this is, if we check another stock, for example, Rumble, where they've had their earnings, you had quite a big push down in price. But you can see, firstly, it consolidates for a bit, then you get a move down, consolidates, move down, kind of consolidates. And that's what you kind of see with stocks like this. You tend to see this happen maybe from, a week to maybe a month. So it's not something you kind of have to jump into right away. It's normally a bit better to give it time, or at least that's what I've noticed over time. So I'll be giving this a bit of time. And if we do see a bit like a Rumble move where we slowly move to the downside, if we could see a move to 1070, that's where I'd be quite happy to grab this long. We do also have another support at $9. Don't think that's all that likely. Even this 1070 will be hard to hit, but if we can hit either of these, they're key supports. Now, we have also broken below two, which were supports and now have turned into resistances, and that's at 1650 and 1725. So considering we got these two levels here, the way I would use these is one of two ways. If you think this stock is going to continue lower, really wait for that retest of these levels, and then this could be kind of that short entry to play that downside. On the other hand, if you want to be more long bias, you're a bit more of a reversal trader, I would actually wait for these to turn into supports. And I think that's how I'm going to trade this. If we don't break down to that $10 level, what I'm going to wait for is for price to kind of push back to this level, maybe break inside of it, test it, break above. And then once you get that retest of this level as a support, and if we can hold it, that's where I'm going to look to take this long bias, because then we can have a nice stop below here. Or again, how I'll probably trade it, hold some puts or something as a protection, so we don't have to have an exact price stop. But if it does go against us, obviously our risk is defined. But looking to basically get along that level and then trade to the upside. And again, final target would kind of be actually where we gap down from, because that was actually at fair value. That's where Foot Locker was trading. $24 is fair value on the stock. $23 would take us kind of back to that gap fill that was created yesterday. So again, that's kind of what I'd be looking at on Foot Locker. On a stock like this, I mean, that is a mega move to look for. If we're getting an entry around 1725 back to the gap fill, which is a 35% move to the upside. So probably be one of those things I'd be locking in profits along the way, especially locking in some profits at $20, just a big psychological level in general.